It's Wednesday and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, we have Andrew Cox giving us a shipper update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hello and welcome to this Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and so we are now watching our outbound tender volume index drop for the first time sequentially since this, of course, big giant Memorial Day thing. But for the first time since all the way back here around May 8th or so, when we did have a little bit of a contraction on the outbound tender volume index just for a hot second before it started to proceed on its unprecedented rise up to where we are still very high at 11,500 or 11,150, I should say, on the outbound tender volume index, a lot higher than we would expect this time, especially considering the coronavirus situation. But it did take a pretty big step backwards. This is not necessarily that unexpected in terms of Monday, Tuesday action. We have seen a little bit of that slowing on Mondays, Tuesdays, and then Wednesday, Thursday, big jumps forward. So we'll see what happens tomorrow on the outbound tender volume index. I would anticipate a relatively higher number tomorrow versus today, but we'll have to wait and see. Maybe we're finally starting to see it hit that top or that peak level. Again, last week could have been a lot of compression in terms of we're losing a day on Memorial Day, so we could have had some compression in the rate volume or the freight volumes. So we'll see what happens tomorrow on that regard. Now, tender rejection rates and capacity. These things do not move hand in hand all the time. There tends to be a little bit of a lag, especially on the demand side, as freight volumes move into the future and we start to see capacity and freight networks get strained a little bit more. Outbound tender rejection index does take a pretty big jump up here, 5.12%, still very, very low for this time of year, especially around the holiday period. So not necessarily seeing an explosion of spot market activity and rates at this point. Let's break it down into reefer and dry van volumes. Reefer volumes looking like they took a big drop day over day. Out there on the green line that you're looking at here, you can see that took a pretty sharp downward turn on the reefer volumes. Van volumes did also take a pretty big step back as well day over day. Again, not necessarily that unexpected considering the rise that it's been on, but it did take a pretty big step back yesterday. So maybe we are starting to see a little bit of a trend change in the volumes to this point. However, tender rejection rates moving in opposition right now, especially on the reefer side, up all the way to 9.73%, its highest value in since the March, compression in the capacity market. So van rejections moving slightly horizontal, a little bit flat right now, 5.01%, but reefer activity, again, on the contracted freight market, they are bailing out of their contracts right now a lot faster than we would anticipate, especially with that sharp decline in volumes. Now, why is that? Well, this is the agricultural spot market rate that the USDA tracks, and we have that in Sonar here. And this is you can see all this green here indicating that all of these lanes, for the produce segment at least, seeing an increase at least week over week. This is a weekly number, average spot market rate, all-in rate for reefer volumes or produce movements, moving off of the big hot produce sectors all over the country, mainly out there in Central California, Southern California, up in the Northwest during the fall, etc. So we're seeing a large increase in spot market rate activity right now for all of these sectors. If you look here, you'll see Fresno to Boston, 12.3% up to $8,200 as reported to the USDA right now. San Francisco to Philadelphia, again, San Francisco responsible for a lot of that Salinas Valley and also the Northern Valley up there. So looking at this, kind of isolating a lane here, you can see that we did have a big trough there in the middle of April, and now it has shot back up. We've got San Francisco to Chicago and Los Angeles to Atlanta there, pulling out of a trough. Historically speaking, though, we are above 2019, but not so much above 2018 just yet. We did have 2018 right here in the center section here. You can see that the spot market was super hot that time of year, but we are now above 2019 for produce movement rates right now. So the reefer sector, again, a lot of these carriers bailing out of their contracted freight to go haul some of this high-paying spot market freight on the West Coast. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your shipper update. I'm here with Andrew Cox. Andrew, who do you have for us today?
Anthony, today we're going to talk a little bit about the Class 8 truck orders. We just got the data in from May. We've had Alan Adler, who has written on this quite a lot, so I want to take some of his work and put it up. This is one of the models that Seth Holm and I have put together. So this gives our yearly by month new Class 8 truck orders, with also this white line as our yearly replacement rate. We did a 225,000 truck replacement rate. You know, they vary between 225 and 275. We picked the low end. In either case, we can see this 2020 number is historically low. So April was a 25-year low for Class 8 truck orders, around 4,300, and we have bounced a little bit off that. But again, if you look on a historical scale, this is the second lowest print in its 7-year history.
Right, and so when we're looking at this, of course, there are many headwinds. We have a pandemic going on right now, as everyone knows. But is there any one industry that's hurting it more so than others? Of course, we've had the ramp up and purchases being pulled forward with a lot of consumer items. What about the industrial segment? Is that really playing a hand here?
Yeah, I don't know if it's playing that much of a hand here. I think truly right now what we're seeing is a lack of demand from overall, but we've also seen a big lack of supply too. If you look at Daimler, hasn't even begun production yet. They're supposed to start producing this week. They had tried to start mid-May, but the supply chain between the U.S. and Mexico on the big truck especially is very intertwined, so they weren't able to get things up and running in Mexico, so they decided to put off production. So right now they're expecting to see production down 40%. They had no production in March nor April, and they're expecting overall demand to be down 30%. So I mean, you're seeing a demand side shock and a supply side shock here in the new Class 8 truck orders.
Right, and one thing that I can really kind of take note of, this 2018 number.
Right.
And 2018 was a huge ramp up in activity overall. Then we saw a lot of people come online in 2019, but that demand wasn't there, so there was an oversupply. Now that we have such a low amount of new truck orders, do you think that there's going to be some type of overhang effect when activity does ramp up and there's a potential shortage of capacity and new trucks in the next year or so?
Well, there's a lot of fleets swimming in young trucks right now, swimming with a lot of capacity. And the truth is that a lot of these trucking companies have been able to survive these last few months through the government, the PPP protection and everything. There's a lot of people, a lot of banks and financial service providers that are giving a lot of deferment of payments and helping people out. So all of that's going to run out soon, so we may see more bankruptcies here in the third quarter and the fourth quarter, even when volumes pick back up, simply because they were being drug along for the last couple months. I mean, I'm expecting a little bit of a capacity crunch. I am expecting some delinquencies and some bankruptcies here coming into the third and fourth quarter. And I'm hoping that the lack of truck orders will kind of keep people pushing through. We're going to have to be watching the used truck market as well. The prices have collapsed in that market. So the whole Class 8 truck order, Class 8 market right now is kind of on its head.
Right, and one of the things that we see when companies go under is that it kind of just gets reshuffled, right? And we see that larger companies get a little bit bigger and they're a little bit more sustained. So that's one of the things you're expecting here, is that a lot of the smaller carriers that aren't able to kind of weather the storm are really going to have to kind of default and go under.
Yeah, I mean, it's a theme we see not only in trucking companies, but across the country. We see it in retail, we see it in restaurants, we've seen it all over the place. We've seen mom and pop shops that have been forced to shut down, and then Walmart and Amazon have continued to stay open, and they've only gotten bigger. So yeah, I would see that as well. I mean, I've heard Zach Strickland say that even when a carrier goes out, that a lot of the drivers don't leave the market. They can usually find a job pretty quickly. And I think that's going to be true here. I don't think these drivers are going to be leaving the market, even though we talk about construction, we talk about some of the other jobs that typically drivers will shift in between the skills that require. Construction is a strong point. We had great new home sales in April. So who knows? There may be some other options here. It seems that this V-shaped recovery is becoming a reality. Things are picking up pretty quickly. Consumer spending is good. So there will be options for drivers if they do get pushed out of the market here in the third and fourth quarter.
Excellent. Andrew, thank you so much. Insightful as always. We love to hear it. And thank you so much for tuning in. That's going to do it for this edition of FreightWaves Now, but the content doesn't stop here. You can check out our FreightWaves TV app on all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.